Now you have to agree that 2011 hasn't been an easy year for anyone, and it's been especially hard when it comes to banks. With its sights set firmly on inflation management, the central bank continued its rate hikes while growth slumped. Banks took a hit on their margins, asset quality and credit growth. ET Now's Simran Gill and Anirudh Ghosh take you through the year that was when it comes to banking.
After raising rates by 200 basis points in 2010, the Reserve Bank of India continued its war on inflation well into 2011, aggressively raising policy rates by another 225 basis points. Yet, inflation remains well above the RBI's own comfort level of 7%. Industry, on the other hand, has taken a significant hit. The latest industrial output data shows the first contraction in over 2 years, and corporates are screaming from the rooftops, claiming high rates have choked their growth plans. Something that begs the question, are we expecting too much out of monetary policy?
For inflation to ease on a sustainable basis and for growth to pick up, you need a supply-side response, which means by way of structural food inflation constraints being eased, infrastructure bottlenecks being removed, reforms being resumed or accelerated, so food supply chain issues being handled.
That the central bank is doing its bit has been acknowledged by the government as well. Structural drivers of food inflation and supply side bottlenecks remain. Clearly, policy inertia at the centre is the biggest roadblock.
The genesis of this particular inflationary episode is such that fiscal policy would have been much more effective in curbing inflation. And therefore, to rely on monetary policy required the RBI to contract much more than they would have ideally liked to do.
Meanwhile, banks across the board have had to take hits on their margins, asset quality as well as credit growth. In the absence of sustained growth in core interest income, banks have seen their off-balance sheet exposures grow over the past couple of years.
There has been a significant rise in Q2, and therefore I would be readily willing to concede that asset quality is definitely a challenge for the bank.
Though there seems to be some respite for banks, with the central bank indicating a pause in rate hikes, 2012 will have its own challenges. Worsening asset quality will be the biggest concern for lenders, with even the RBI expecting a significant rise in bad loans next year. While the promise of lowering rates could improve corporate sentiment and credit growth, concerns on the global front persist, and banking is not going to get any easier in 2012.